If you haven't positioned into gold and into silver, you need to change that behavior, because depending upon this stuff is only putting you in the direct line of fire. When all confidence is lost, then they bring out gold. And I've had so many people say to me, and I'm about to show this to you, but I've had a number of people say to me, well, Lynette, how do you know that they do the revaluation against gold? Well, it's pretty simple. If you have this that has absolutely no confidence left in it and it's hyperinflating away so the public doesn't want to use it, you have to take something that has no intrinsic value and revalue it against gold money that's used in every single sector of the global economy. So it is all utility and all intrinsic value. And you revalue this against this, and then that is supposed to garner the confidence again. But if this or digital assets or whatever are not convertible into this, it ain't over yet. They're not done. Don't trust it. Don't trust it. Hopefully those that are watching this video have been buying physical gold coins. I know I certainly have been. But why would corporations do this? Because prices in the goods and services that they sell are rising faster than they can increase those prices to the consumer. So with corporations, and we've seen that a bit in the US as well, but with corporations buying physical gold coins, it saves their purchasing power as well, because this is reflected in what's happening in the loss of purchasing power to the currency. So there are strategies that are executed, and those companies that have learned from history, those individuals that have learned from history are actually buying physical gold to hold their purchasing power. Physical gold coins protect these overnight revaluations and devaluations. Now you can say to me, well, yeah, and they used the US dollar to do that revaluation. And yes, they did, except that what do you and I know here in the US? That the US dollar is losing purchasing power as well, right? But again, it's just a small percentage of the population that can afford them. And I'm going to show you the pricing in terms of Zim dollars and US dollars in just a minute. You want to get it while the price is still cheap. And even above $2,000 in this country, an ounce with the premiums, it's still dirt cheap. It still does not reflect its fundamental value. And it doesn't in Zimbabwe either. But since the first issuance on May 12th, 373.47 kilograms of ZIG have been purchased. Okay, so they're trying to get people to adopt the Zimbabwe CBDC, central bank digital currency. And in order to do that, they had to make gold a component of it. Is it really? I don't know. We're going to talk about that more in a second.
Lynette Zang underscores a critical message. Holding physical gold and silver is paramount in safeguarding wealth, especially as global economic confidence wanes. When fiat currencies and digital assets lose trust, gold, with its intrinsic value and historical stability, emerges as the cornerstone of financial security. Central banks and corporations understand this dynamic. Zang explains that in times of hyperinflation, when a currency's value plummets, revaluation against gold becomes necessary to restore confidence. This is not mere speculation, but a historically validated strategy. For instance, during periods of severe economic distress, such as the hyperinflation in Zimbabwe or the post-World War I Weimar Republic, gold retained its value and purchasing power, providing a lifeline for those who possessed it. The notion of gold as a revaluation tool is rooted in its utility and intrinsic value, unlike fiat currencies, which can be printed at will. This intrinsic value is why central banks worldwide hold significant gold reserves and why corporations are now buying physical gold coins to protect their purchasing power amidst rising prices. Corporations and individuals who understand historical financial trends are turning to physical gold. This trend isn't limited to a few savvy investors, but includes large institutions. For example, in recent years, several central banks have significantly increased their gold holdings. The World Gold Council reports that global central banks bought 374.1 tons of gold in the first half of 2021, the largest increase in over a decade. This strategic accumulation isn't just about diversifying assets, it's about survival. In a world where fiat currencies are rapidly losing purchasing power, having physical gold provides a hedge against economic uncertainty. It ensures that wealth isn't eroded by inflation or economic mismanagement. Zang addresses a common question: how do we know that gold will be used for revaluation? The answer lies in the nature of fiat currencies and gold. Fiat money, with no intrinsic value, requires a tangible, trusted asset like gold to regain credibility when it loses public confidence. This isn't just theoretical, it's a practice observed throughout history. When currencies fail, governments have often turned to gold to stabilize their economies. Moreover, gold's role as a Tier 1 asset, as recognized by the Bank for International Settlements, BIS, further solidifies its position as the ultimate store of value. The BIS, known as the Central Bank of Central Banks, reclassified gold as a Tier 1 asset in 2019, placing it on par with cash and government bonds. This reclassification reflects gold's enduring importance in the global financial system. Zang points out that the loss of purchasing power in fiat currencies drives the need for assets that retain value. Physical gold coins, for instance, protect against overnight devaluations and inflationary pressures. Even with premiums, gold remains undervalued compared to its fundamental worth. This undervaluation is an opportunity for investors to buy gold at relatively low prices before its value is fully realized in the market. Consider the situation in Zimbabwe, where the government introduced gold-backed digital tokens as a tool of barter. While these tokens are redeemable in fiat currencies, their true value lies in their gold backing. This approach aims to stabilize the economy by tying value to a tangible asset. However, as Zang emphasizes, the key question is whether these tokens can be converted into physical gold. Until they can, the currency crisis isn't truly over. Zhang's insights highlight the importance of learning from history. Those who have studied past economic crises understand the need to hold physical gold. The lessons from Zimbabwe, Venezuela, and other nations experiencing hyperinflation are clear. Fiat currencies can fail, but gold retains its value. By holding gold, individuals and corporations can protect their wealth from the erosion of purchasing power. For example, during the 2008 financial crisis, gold prices surged as investors sought safe haven assets. The same trend is observable today, with increasing geopolitical tensions and economic uncertainties driving demand for gold. Investors are recognizing that gold is not just a commodity, but a critical component of a resilient financial strategy. While gold often takes the spotlight, silver is equally important in a diversified portfolio. Silver has historically maintained a close price relationship with gold. Given its lower price point, silver offers a more accessible entry into precious metals investing. It also has significant industrial applications, which can drive demand and value.
But the positive growth and uptake of ZIG has laid the foundation for the successful launch of the transactional phase, which was announced on October 5th of 2023. So this is using the ZIG in transactions as a tool of barter. The question I have, and I've had right along, as you guys know, is can you convert the ZIG into physical gold? We're going to answer that. The initial phase of the gold-backed digital tokens entailed the issuance of the value-preserving instruments for investment purposes, with a vesting period of 180 days and redeemable in the same way as the gold coins. So no, not into gold coins, but redeemable back into either US dollars or a local currency or the ZiG or Zimbabwe dollar. So they're trying to de-dollarize. It's just that the dollar isn't going to save them either. But physical gold in your possession, that's what's going to protect you. Now let's look at the gold-backed digital currency that can only be liquidated into this stuff. That's all. It can only be liquidated back into fiat, not into gold. It ain't over yet. Zimbabwe's currency crisis is not over. They just make it look like it, okay? So what they want to do is rebase the economy. This is from a current IMF report on Zimbabwe, technical assistance report, national accounts mission. So they want to continue to keep everything hidden. And I'm going to you can go in and read this report for yourself, but you can see that they have a plan. Do you have a plan? And they are executing that plan. August, this is resolve issues with VAT data in advance of the 22 annual publication. And that was to be done by August 2023. And it is completed, right? So they have a plan, they're executing it.
As we delve deeper into the current economic landscape, it becomes clear that the relevance of gold and silver is more significant than ever. The persistent issues with fiat currencies, coupled with rising inflation and geopolitical tensions, underscore the need for stable assets. From a global perspective, the strategic accumulation of gold by central banks is a clear indicator of its enduring value. Countries like China, Russia, and India have significantly increased their gold reserves in recent years. This trend reflects a growing recognition that gold is a critical asset for economic stability and sovereignty. For instance, China's aggressive accumulation of gold is part of a broader strategy to reduce its dependence on the US dollar and increase its economic influence. Similarly, Russia has been diversifying its reserves away from the dollar and into gold to protect against economic sanctions and currency volatility. These actions underscore the strategic importance of gold in maintaining national economic security. The shift in monetary policy by central banks also highlights the importance of gold. With interest rates at historic lows and massive quantitative easing programs, the traditional tools for managing economic crises are becoming less effective. This has led to increased interest in gold as a hedge against potential financial instability. Central banks are not just accumulating gold, they are also revisiting gold-backed monetary policies. For example, discussions around the potential for a new gold-backed digital currency are gaining traction. This approach aims to combine the stability of gold with the convenience of digital transactions, providing a modern solution to the age-old problem of currency stability. The concept of gold-backed digital currencies, like the one introduced in Zimbabwe, represents a significant evolution in monetary policy. These digital tokens, backed by physical gold, offer a way to stabilize economies plagued by hyperinflation and currency devaluation. However, as Zang points out, the key is convertibility. Until these tokens can be exchanged for physical gold, they cannot fully realize their potential. This digital revolution is not limited to Zimbabwe. Other countries and private institutions are exploring similar initiatives. For example, several blockchain-based platforms are developing gold-backed cryptocurrencies that aim to provide a stable and secure digital asset. These innovations highlight the ongoing relevance of gold in the digital age. The broader economic implications of these trends are profound. As more countries and institutions adopt gold-backed monetary policies, the role of gold in the global financial system will continue to grow. This shift could lead to a more stable and secure global economy, with gold serving as a foundation for trust and value. However, this transition also poses challenges. The existing financial system, heavily reliant on fiat currencies, will face significant disruptions. Investors and policymakers must navigate these changes carefully to ensure a smooth transition to a more gold-centric financial system. For individual investors, the lessons from these trends are clear. Diversifying into physical gold and silver is a prudent strategy for protecting wealth. This involves not only purchasing coins and bars, but also considering gold-backed investment vehicles and digital currencies. Investors should also stay informed about global economic trends and policy shifts. Understanding the broader context can help them make informed decisions and adapt their strategies as needed. Regularly reviewing and adjusting their portfolios to align with changing economic conditions is essential for long-term financial security. In light of these insights, it's crucial for viewers to take proactive steps in safeguarding their financial futures. Investing in physical gold and silver is not just about wealth preservation. It's about securing a stable and prosperous future. By understanding the historical and current relevance of these precious metals, investors can position themselves to weather economic storms and thrive in the long term. In conclusion, gold and silver remain indispensable assets in today's volatile economic landscape. Their intrinsic value, historical stability, and strategic importance make them essential components of a robust financial strategy. As we face increasing economic uncertainties and potential disruptions, holding physical gold and silver provides a critical hedge against financial instability. For viewers, the message is clear. Diversify your investments, stay informed, and take proactive steps to protect your wealth. By doing so, you can ensure a secure and prosperous future for yourself and your loved ones. Embrace the enduring value of gold and silver and position yourself to thrive in a rapidly changing world. For American and allied citizens, it's vital to recognize the strategic importance of gold and silver in preserving national economic security. As global economic dynamics shift and fiat currencies face increasing pressure, these precious metals provide a reliable foundation for wealth preservation. By investing in gold and silver, you not only protect your financial future, but also contribute to the broader goal of economic stability and resilience. Stay informed, take proactive steps, and ensure that your investment strategy includes these timeless assets. In a world of uncertainty, gold and silver offer a beacon of stability and security.
Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today. Link in the description.